pero antes nos trasladamos ya con nuestro invitado internacional, Edward Moya, Market Analyst at Marketpulse and Oanda. Welcome.
Thank you for having me.
I want to start by talking about this current rally in the stock market during this first quarter of 2023. Do you think the possibility of a hard landing is already priced in?
Well, I think there's expectations that the market is going to see a recession in the second half of the year. The economy is clearly weakening, and I think the big risk that, or the most uncertainty is, there's a big credit risk on the table, and there's still a lot of uncertainty with the banking system. I think there's probably other regional banks that are going to be under stress over the next several months, and you're probably going to see, I think, further troubles with lending later in the year. So I think you're going to see much more noticeable weakness as the year goes on, and that's going to spell trouble for small and medium-sized businesses, probably in the third and fourth quarter. But I think in the end, will we have a hard landing? That is a potential scenario. But I think right now, markets are starting to anticipate fairly aggressively that the Fed's going to be cutting rates, by possibly 3 rate cuts by the first quarter of next year.
Very interesting, Edward. And what is your opinion about the labor market? Because yesterday we saw that data from the JOLTS report falling below 10 million. Today we saw in the ISM from services a drop also in employment, about 2 percentage points. Do you think it is possible to start seeing a weakening in the labor market, as we saw in the ADP also, employment?
I think so. I think right now there's clear signs that the service part of the economy is showing some weakness. This has been something that everyone has been waiting for. Manufacturing has been in a recession. Those jobs have been lost, and I think right now, when you take a look at the service part of the economy, it's been fairly robust, and now we're starting to see some signs of loosening. That's probably going to continue, I think, throughout the summer, and I anticipate that you'll start to see some job losses probably in the middle of the summer, and that's going to really probably help continue the disinflation trends that we've been seeing over the past several months. Now, I think overall, this economy has still a lot of strength. There is going to be probably more noticeable weakness, though, I think, in the coming months, and you should anticipate further job losses, I think, going forward. But I think you'll start to see manufacturing weakness bottom out, I think, in a few months, and it'll probably be more noticeable on the service side.
Very interesting. And what are these implications for the market? Because it was not expected to see services dropping like this, and if they continue to contract, maybe it's not pricing for the stock market. Do you think the bull market can continue, or we will see some weaknesses in the indices for the next month?
Well, right now, I think there's a lot of skepticism that this bull market rally it's going to be difficult for it to continue. Now, as the market starts to become a little bit more aggressive in pricing in these Fed rate cuts, you're going to have a much weaker consumer, and I think that as the economy heads to a recession, that means something's going to break, and I think the big X factor is you still have the potential of a big credit risk on the table, and if we have some more banking trouble, that's probably something where we might not see it coming just yet, but I think there are risks that you could see much more trouble with the lending. I think you could see small businesses really be hampered over the next several months, and this is a difficult outlook for I think small business, and that's a big part of the economy. So I'm anticipating that you're not going to see the consumer spending remain fairly robust in the second half of the year, and if that's the case, if consumer spending is going to struggle, that's over 2/3 of the economy. It's hard to be that optimistic for stocks. stocks. So if you take a look at some of the way the market's been behaving, it's been mostly defensive posturing. So I think, if people are going more into like real estate and healthcare and energy stocks right now, that's not really a good case for the bull market to continue. So I think you're probably going to see that investors are preparing, for some stock market weakness over the short term. And I would not be surprised if we did see a pullback once earnings season gets kicked off. And if the banks are, rather disappointing with their outlook for the consumer, and if we see further strains with some of these other regional banks, I would not be surprised if we did see, some aggressive selling at the start of earnings season.
Very interesting, this change in position that you are saying, and I want to ask you about that also. Do you think investors are going to change that cyclical assets into defensive ones, and are they going to go for the fixed income, for example, for gold, fixed income, or more defensive stocks?
Well, they've been going to gold pretty quickly and fairly aggressively. It looks like gold has been, making its way towards a record high in dollar terms. I think there's been a clear anticipation here that this economy is headed towards a recession. A peak in the dollar for a lot of people seems to be in place, as the Fed is most likely very close to being done with its tightening cycle. I think no one's believing some of the hawkish Fed speak that we've been getting. I think it's difficult because right now we're late cycle right now, and I think you're probably going to see more defensive plays. The fixed income trade has been a little bit difficult because some people have been trying to, they got it wrong, or I think you're probably going to look at a flattening trade over for quite some time. But I think overall, this is a market that is probably going to see more of a defensive trade, I think, for the next quarter or so. But in the end, this is a difficult environment because the assessment of what type of recession we have, that's still to be determined. And investors right now, I think caution is kind of the consensus trade.
Edward Moya, market analyst at MarketPulse and Oanda, thank you very much for your time.
Thank you.
Pues ya hemos conectado con Edward Moya, que nos comentaba sobre el mercado. Bueno, lo primero le hemos preguntado sobre la parte del empleo y estos datos que hemos ido viendo, sobre todo hoy, las nóminas ADP cayendo, no cayendo, sino saliendo por debajo de lo esperado, en 145.000, se esperaban por encima de las 200.000, por tanto un empleo más flojo de lo esperado. También ese dato del ISM de servicios, ese PMI de servicios en Estados Unidos, que también salía con una caída muy drástica, los nuevos pedidos contrayéndose más de un 10%, el PMI de servicios cayendo también un 3,9% en el mes, y le preguntábamos sobre si esto pues también es malo para el empleo, porque caía un 2,1% la categoría de empleo en el PMI de servicios. Nos dice Edward Moya que seguramente sí, que está empezando a notar, se está empezando a ver ya una debilidad en la parte de servicios. Recuerden que los servicios era lo que más fuerte se había mantenido hasta ahora en la economía, mientras los bienes ya estaban en contracción desde hace bastante tiempo y la parte manufacturera también. La parte de servicios era la que estaba manteniendo, de nuevo, la fuerza de la economía y también la presión en los precios. Era la parte que también estaba forzando que hubiese más presión en los precios. De hecho, esa categoría que nos decía la Reserva Federal, hay que mirar hacia la inflación subyacente quitando la vivienda y coger toda la categoría de servicios para ver cómo están incrementando los precios. Bueno, pues ahora parece ser que los servicios empiezan a aflojar y que por tanto la economía empieza a mostrar más debilidad. Esto en parte, decía Edward Moya, pues lo que hace es que la Reserva Federal se tope con un dilema, y es si siguen incrementando tipos de interés, ahora sí que cada vez hay más unas probabilidades de romper algo. Recuerden, la Fed ya no lleva airbag, va sin cinturón y sin airbag conduciendo a 200 por la autopista, y ahora mismo si quieren seguir incrementando la velocidad no tienen ningún tipo de seguridad al volante, porque ya no tienen una economía que estaba floreciente, que iba muy bien y donde el mercado laboral era tan fuerte. Estamos empezando a ver esas debilidades, lo que hace que la Fed tenga que replantearse dos veces, ir a por otra subida de tipos de interés o mantenerse y pausar ya en el nivel en el que nos encontramos actualmente. Sin duda será importante y ver también cómo el mercado se lo toma. Hoy, a pesar de que hayan sido datos malos, que en principio malos datos serían buenos datos para los inversores porque forzarían a la Fed a realmente confirmar una pausa, parece ser que el mercado también está tomando un poco más el tono defensivo. Nos comentaba Eduard Moya, fíjense que hoy los activos que están subiendo son los defensivos, están yendo hacia salud, están yendo hacia consumo básico, están yendo hacia utilities y están yendo hacia el mercado de bonos, donde vemos los intereses caer pero el precio de los bonos subir, y están yendo también hacia el oro. Un combo completamente deflacionario de recesión y donde la gente busca protección, donde se están yendo los inversores hacia un tono defensivo. De hecho, decía Eduard Moya que ese cambio que está viendo desde las cíclicas a las defensivas es lo que podría hacer que este rally se terminase y que espera más debilidad para los próximos meses. Estas han sido las conclusiones de las preguntas que le hemos hecho a Eduard Moya, analista de mercados en marketpulse y oanda.